All right. Hey, trust you're well. Just kind of recapping what we're working on here this week and kind of what is got our attention and what we're focused on. Definitely, as we're shooting this today, Friday, the jobs report is coming out. We've seen a weaker jobs element here in the country, and then that's also affected the bond rate. So, but what we're talking about, there was a most recent article from Kiplinger's on the housing market, and we see the housing market is really inventory is up dramatically. Again, now we're speaking on a national basis, but again, I want to preface it all. Single family home, no doubt, is market based on the sub market location, city, etc. But again, when you look at the numbers, as of June, kind of into June this summer, into July, the Schiller Case housing index pricing was still up about 1%, meaning that prices have held. Now, in some areas, there's no doubt prices are beginning to soften because inventory has risen as an average of some places, some say 15-month average, so that is starting no doubt to become what would be a buyer's market. And part of that is the uncertainty that people have experienced in the economy. It's also reflective of the higher interest rates. Mortgage rates are up at 7%. Now, as I shared with you, the jobs market softening has helped money to rotate into the bonds. And, again, I know there's a lot of talk about the Fed cutting rates, but just so that we understand that mortgage rates for both single family homes and even apartments on the longer term Fannie Freddie loans are driven by the bond market. Typically, the 10-year treasury is what is the guide that is really the deliverance for interest rates. But now, as we said, interest rates right now on the 30-year mortgage for single family home is averaging now down about 6.5%. I say down about 6.5, right? Like, before it was 3.5, 4.5, 5.5, and people really got, kind of spoiled or accustomed to that. And so that's put more people on the sidelines. So we're beginning to see, as I said, in certain markets, even like we're at in Tampa, St. Petersburg, Florida, that the market is softening, that days on market is increasing up, price is down, depending on the little sub-market, meaning the pocket or city. There's some where the price is, stabilized and they still sell well. There's others where, quite frankly, the price is probably down 15 to 20% in that neighborhood or sub-market area is not moving that well. So you need to definitely be, specific on what you're looking at in terms of housing. Now, what does that mean? Well, first of all, I would say, there is opportunity. We see that also with our secured lending fund, that in the single family home front, because of the softening market, there now begins to present more opportunity that is able to be executed upon. So then also additionally, what does that look like? Many people are still priced out of home purchasing. That's also why people aren't buying, because again, and depending on the area, this area here, it's tough to get a starter home for probably $350,000. Now, again, prices are starting to soften and they're starting to become more of a reality where you can get kind of a fixer, maybe a 2-1 for 300 grand. I mean, that's still expensive. And so, what we have to look at and see is that, our price is going to decline further. Well, there are a lot of fund investors, hedge funds that are still in the market to buy single family homes. And so that provides for a bottom. I would also say that as interest rates decline, like we're starting to see now, that will likely bring more people back into the market. Now, that also being said, it's conditioned on what starts to happen in the jobs market. Are there more layoffs? Is there a softening in the economy? With that begins to affect consumer confidence and people are less inclined to move forward. On the single family front, that then translates into rental demand, less people can afford homes. It is not likely that there is going to be a widespread decline in housing values just based on the demand that's there. And as a result of that, pricing has not come down. So a majority of people continue to still be renters either by necessity or renters by choice. And so that translates also into strong demand for rentals on the apartment complex side and or build to rent as well. So again, even though these are challenging things, they also represent a great opportunity for real estate investment. And so again, you'll see too with us more activity in the secured lending fund, more activity with our residential focus division, people working on that because there's just more opportunity that's presenting itself. And ultimately in the marketplace, you have to take advantage of the opportunity that presents itself. And that's also where, we'll talk about some of the future things that we see with the distress side of things in multifamily and what's coming about there. So, hey, thank you so much. Have a blessed and victorious week, for this is the week God has ordained for you.